Hey, ladies and gentlemen, back with another recording for today for the Oliver Perry Show. I've got another wonderful guest. I'm super excited to talk to this guy. I'm a fan of his YouTube. And we'll talk a little bit more about that here in a bit. First thing, I want to give you a little bit of a background. So he's been in a fund. He started a fund in 2009. He's been focused on luxury real estate at the time, San Francisco Bay, doing over 100 million. He's the largest owner of commercial historic properties in San Juan, Puerto Rico since 2004. He's authored some best-selling books, RE investment books, and continues to share his methods and programs through his education company since 1998. He's also helped quite a few people, put them on the right path, show them how to create funds, and some of them have gone on to create some amazing things on their own. He's got over 2,000 videos on YouTube with training and success stories. Ladies and gentlemen, Cherif Medawar. Cherif, right. How are you, sir?
Thank you, Oliver.
Fantastic.
Great. Thank you.
Hey man, I'm super excited to talk to you, Cherif. Shout out to Ashley, one of your team. She was amazing. Her and I had a long conversation, and we talked about some things that you do, and we also talked about some people within the community as well. And I look forward to having another conversation with her at some point in the future. But today we're going to focus on you, Cherif. We're focusing on you and your message and things that you've done. So Cherif, let's hop right into it, man. Let's go right into it. So you are big on funding, specifically the 506, Reg D 506B, correct?
Reg D 506B and C, both of them. Those are regulations.
Okay, fantastic.
Yes.
All right, so do me a favor. For the audience that does not know what a Regulation C and a Regulation B is, could you explain what those are?
Yes. So let's say you're a good investor in real estate and you're able to deploy your money successfully. You buy, let's say, small apartment buildings or maybe fourplexes even, or you're getting properties that you rehab them and sell them. So you got a business model going and you say, my gosh, I can scale my business now that I have a system and a method to make it, and I want to just scale it. One of the best ways to scale your business is to set up a structure that's approved by the Securities and Exchange Commission, which is the government organization that allows you to raise money from investors, group the investors' money together, and deploy that capital, that money, into the projects you're doing. So you're actually in the securities world. The securities world is when you actually take money from people, invest it on their behalf, you make all the decisions, and you give them some returns. So that is a phenomenal way to grow. Some people will take them 10, 15 years to get to a level, or you can do it in 1 year, maybe 2 years by setting up that type of structure. And the regulation that allows you to do that is called Reg D, and there is Reg D 506B and 506C, and I can explain the differences in a minute.
Okay, all right, so let's dive right into that. Cherif, don't stop now. What are the differences between the two? Let's really break it down, because I want people to watch this and say, oh, okay, I got it now. I understand what like a 506B and a 506C is. And so they can really start getting their time going when it comes to multifamily and funds.
Okay, so let's say now you're going to say, okay, oh my gosh, I'm going to set up a real estate fund. We help people set up funds. So I tell you what we do with them so you can see the steps. Number one, I ask the person, because an attorney, you have to go to an SEC attorney, like an attorney that's trained with the Securities and Exchange Commission. That attorney just wants the info from the investor. Let's say you're the investor, you want to set up a real estate fund or a syndication. They're going to say, okay, Oliver, what would you like to put in it? And if you say, well, I'm not so sure, should I go this way or that way? The attorney is going to say, I cannot advise you because I don't want to have problems if something goes wrong. So people look for people like me who can help others set up a fund. So the first step I tell the people is like, okay, let's set up a business plan. So the first thing is going to be what I call the 5 Ps. Number one, who are the people involved? So we're going to say it's Oliver and some broker or some management company. What is the actual property? The property or the properties will be in the northeast part of the country, in Virginia, in New Jersey, in whatever. And number 3, what's the positioning? Well, each property is going to have to be next to university, or each property is going to be downtown or something like this. So what's your positioning? And what's your marketing angle? What's your unique selling proposition? That's the 3rd P. So property, the people, the property, the positioning, and then the performance. When you get the money, what are you going to do with the money? We're going to acquire these properties. We're going to get a loan for 65%. We're going to keep 10% for capital money. So when we rehab the properties or improve them, then we have that. So you have the story of what's going to happen with the money. And number 5, P is for the profit. We're going to pay the investors, let's say 5% cash flow. And when we sell the property, we're going to give them 65% of the upside, something like this. So once you draft the business plan, then I discuss with you, first of all, I see if you can accomplish that. And then I ask you, who are you going to raise money from? Because the Reg D 506B will tell you, you can go raise money from friends and family, and you cannot publicly solicit. So you just go to friends and family, people who've known you, with whom you have what's called an existing and substantial relationship. And you can raise the money. You can raise 25,000 each, 100,000, 500. And you can say, look, I'm going to raise $1 million and I'm going to go buy a property for $4 million. So the SEC allows you to do that. And the beauty about Reg D 506B is you can have two types of investors. Accredited investors, by definition, those who have a net worth of $1 million, excluding their primary residence. So they have investments, they have 401k money, they have stock options, whatever, that add up to at least $1 million. And, or they actually have 200,000 in income per year for the past 2 years and expect to do the same this year. And if they're married, they should have 300,000 of income for the past 2 years and expecting to make the same for this year. That type of person is accredited. The other type of person you can have into your fund, you can solicit from friends and family under Reg D 506B, are non-accredited, sophisticated people. Meaning a friend of yours who is a teacher, making good money per year, but he's not worth $1 million. Well, you can take 35 of these people. So that's wonderful, because now all of a sudden you can help these people who can qualify for other programs. So those are non-accredited investors. You can take up to 35. But what's the downside of it? The downside of it is you cannot go publicly solicit. So this, believe it or not, Reg D 506B was set up by the Security and Exchange Commission since 1933. And very few people knew about it until Obama. Until Obama came. And as you know, Obama inherited a disaster economy. And he said, I got to do something about this. And he said, what if I allow these real estate investors that set up these syndications and raise capital, what if I allow them to publicly solicit? Not just friends and family, but they can say, I am Oliver Perry, or I am Cherif Medawar, and I got this apartment building for 30 units, and I would like to raise $1 million. I'm going to get a loan for $3 million, and I'll pay you this, and I'll do it, and publicly solicit. Can you imagine the potential now? So the SEC said to Obama, okay, this, by the way, was the Jobs Act, part of the Jobs Act. Obama never got enough credit for it, which is unbelievable, because one of the best things he has done for the United States of America until now, it created a bonanza in the country. And that's what actually turned the economy around, if you ask me. But what's amazing is the SEC said, Mr. Obama, President Obama, we're okay with it, but we cannot allow people then to take money from non-accredited investors, because these are the people that don't have a lot of money. You can publicly solicit. We're going to create Reg D 506C, but you got to go to people that have a net worth of $1 million or have an income of $200,000 a year if they're single. That's gross revenue, gross income, or $300,000 if they're married. And then they can publicly solicit. But we also, when somebody says to them, yeah, I want to join your fund or your syndication, we want them to get a third party to qualify that person that they're truly having a net worth of X. So now you have the choice between two funds, Reg D 506B, which I started with, friends and family. You don't have to publicly solicit. You don't have to ask anybody to qualify them. John Doe off the street comes and says, Oliver, I want to give you $50,000. I'm not accredited. You can say, don't worry, you're my friend. You don't need to be accredited. I got that special program approved by the SEC, signed right here. And they review your business plan and they sign a subscription agreement that says they subscribe by giving you 50,000 or 100, and then you can get a bunch of people and get $1 million from friends and family. But now you also have, as of 2015, you had the opportunity to set up the fund. You can put an ad in the newspaper. You can go on YouTube and you can say, hi, like I do. I'm Cherif Medawar. I've been in the real estate fund business since 2009, and I have a great opportunity for you. And what we do is the people involved are this and this. The products that we have, the projects we have are this and that. These are the properties. And we are different than others because here is our positioning in the market. And here's the performance, what we do with the money when we raise it. And these are the profits we're going to pay you in however long it's going to be paid. And now I'm publicly soliciting. And when people respond and say, oh my God, can I see your private placement memorandum, which is the document that the SEC says you have to have to publicly solicit. I say to them, are you accredited? If they say yes, wonderful. If they say no, I say, well, I have to establish a relationship with you, and in a few months I can put you in my other fund for the non-accredited. So it's a beautiful way, and I'm simplifying. There are a lot of little rules and regulations and stuff. But if you do it right and you're in compliance, I mean, Oliver, the sky's the limit. I mean, how much money do you want to raise? And I'm not saying go crazy, just advance prudently and get the right projects. And the money will come in and the bankers will give you money, and the bank will say, we need 25% down. You're going to say, how about this? I'll get the 25% down. I'll put 5% in reserves because I want to rehab the property. And the bank will be like, I'm going to throw money at you. I'm going to work with you. Right. And I know you do apartment building.
Right.
So that's the beauty of raising capital. It's no longer your unit of time, your unit of effort, your unit of money. It's now the sky's the limit. You have a business model. Can you automate it? That means, can you get a team of people to help you? So you can step back and raise the capital and deploy it in that system you have. Now you can go to the sky. How far you want to go, it's up to you.
All right, Cherif. So let's get a little bit deeper into it then. Let's dive a little bit more. So I know in 2009 you started the fund. You broke down how the 506c and the 506b work. But what took you to start in 2009 as a fund, as opposed to doing the case by case? You know, most syndicators do like the case by case piece. All right, I'm gonna do a 506 this way. I'm gonna do this one, the 506b, 506, so on and so forth. What made you get into strictly, or not strictly, but focusing on funds themselves in this same style?
Excellent. So let me explain to your audience the big and most important difference between a syndication and a fund. So a syndication is when you raise money for one specific property that you're going to close on it, let's say in the next 60 days, and you got the loan lined up and you got some investors ready to go. So you set up a syndication. You can go to an attorney. They will charge you between $25,000 to $35,000, maybe a little bit more, maybe a little bit less, but it's going to cost you an average of $30,000. And you can, that SEC attorney is going to legitimize everything. He's going to get your business plan. He's going to put it in an operating agreement, set up an LLC and all this. And you're going to set up one syndication. So a syndicator is somebody with one asset in one structure. They raise money for it. They get a loan for it. And that's it. Once they fund it, that deal is in for 5 to 7 years. And investors are in, and they get some cash flow, and they wait for the big payout 5 years later. However, what I did was really crack the code at another level, which I'm very proud of it, because immediately it popped to me as I said, wait a minute, I don't want to set up one at a time because I'm constantly buying properties and fixing properties, selling properties, holding properties. I can't be paying $30,000 every time I see an attorney. So the attorney said, oh, the first one 30, second one 25, third one 20, and then I keep you at the 20 everyone. And I said, geez, this is going to cost me like 100,000 just setting up these. And then it dawned on me that instead of setting up a syndication for each property, I can set up a real estate fund. So a real estate fund is like a mutual fund in the stock market. A real estate fund is one structure that says, give me the money. I'm going to invest in this apartment building. I may buy this retail shopping mall. I may buy this strip mall over here. I may buy this single tenant building, standalone building with Jack in the Box that I'm going to put in it. I'm going to buy this small hotel that's going to take to another level. And now I can put different assets with one structure, and the investors can come in, and now it's an up and running revolving structure. And that can take you to the 100 million in no time. And you said 100 million for me. I mean, I don't look at, like, I know some people obsessed about having $1 billion in assets. Not at all. For me, it's not the size of the funds. It's the size of the cash flow, the profits. I like to balance my life and sleep at night. So the key thing is set up a real estate fund so you can have multiple assets. So when you talk about the people, you can say, I have a team of people. You talk about the property, you can say we have different properties. We're diversified by properties. You can do like me, I'm diversified by region. I'm in San Francisco, California. I'm in Old San Juan, Puerto Rico. Why Puerto Rico? Because it's a US territory. It's got a lot of tax benefits, and it's just booming over here. I'm actually in my Puerto Rico office right now. It's a historic building, it's beautiful. In San Francisco, we deal with luxury homes. In Puerto Rico, we deal with commercial properties next to where the cruise ships arrive. So you can have a fund that lowers the risk. There's always risk, and you cannot say it's guaranteed. You cannot say this. There are certain disclosures and disclaimers. You have to follow the rules, but it's a lot less risky when somebody gives you the money and you got a bunch of assets than if they give you the money and all you have is one asset, right?
Yeah, no, that's 100% true. It is so much easier if you have that assets you're running and the money just coming to you. It's always so much easier. So all right, so you got started. You've broken down the difference between the syndication and the fund.
Yes, sir.
I understand you started in 2009. That was right around the time where we had the whole fallout, if I remember correctly. Am I right? Whole real estate fallout.
You're absolutely right. Market was still collapsing. Yes.
So you've seemed to have I'm not going to say beat the system, because we all could beat the system. I'll say you have mastered a technique to get through the rough time. What's the difference between what you saw in 2009 and what you're seeing right now in the current market, as it's kind of is wonking all over the place due to COVID and everything else?
Yes. There are many differences, but let me preface this by telling you, in 2009, the market had dropped tremendously and was still coming down. I mean, it's just like you would make an offer and people would accept it, and you make another offer lower. You said, no, I changed my mind. And they would take this lower. It was just crazy. So it was a bit scary, but it's cyclical. It goes up, flat, down, then goes up again. So I made a point to buy below where it is at the current price. Like if it's here, I buy it here. If it's here, I buy it here. This is in residential. And then I was just beautifying the properties, adding square footage and selling. So I was making money. In commercial, I look at the cash flow. If I take it at this price and add value this way, change this, add antennas on the roof, change the tenant, and I can make more money. So it didn't matter for me more and less on commercial where the market is trending. I just wanted to know how it's going to cash flow. And in residential, all I wanted to know was what's the current price. I'm going to buy below. I'm going to improve it so I can sell it right away at a better price. So the difference between 2009 and what's happening now in end of 2022, beginning 2023 is now a lot of investors have put 30 and 35% cash down payments. Number one. Number two, it's not like the bad loans that the banks were giving before. The banks have been very cautious in the last 10 years. So people qualified to get these loans. There has not been no asset, no income verification loans. If somebody promotes that online, they're not going to give the loan unless they have either more down payment or extra collateral, etc. So totally different market. Moreover, the unemployment is very low. You can find workers anywhere. I'm sure. I mean, I was in Los Angeles the other day. I had to go to Orlando, and I see signs all outside these fast food chains that say, we'll pay you so much per hour. We'll give you a bonus if you stay more than 90 days, etc. Everybody's looking for employment, for employees. Right. So we have shortage of labor, which is huge. They printed a lot of money, but there is shortage of supplies. They need more supplies. We need more homes. Also, the dollar is so strong. Look at, inflation means the dollar is weak, but it's not true, because when you look at the euro, for the first time in 20 years, the euro is at par with the United States dollars. The dollar is very strong to the international, to the global economy. It's phenomenal. So they're going to keep increasing interest rates for a few more months, probably till like summer 2023. And then they're going to say, oh my gosh, we did it too much. Let's ease off. And then they're going to drop interest rate, market picks up again. So it's time to buy. If you're buying for yourself, I'm closing next week on a beautiful home in Los Angeles because my kids want to be there and stuff, next to my sister and my brother. And guess what? Interest rate is higher than we expected. It's double what it was last year. We're talking 2021 December, but it doesn't matter because I'm going to buy the home. I got a good deal, fairly good deal. And in summer next year, I'm going to refinance and drop my payments. And I got the property that I want. And if I'm investing, I'm saying to the seller, hey, the economy is not going right. I need to get a better price. So you either get good financing or you get a better price. And what's happening now, it's a much more solid market. A lot of people have locked in 3.5%, 4% interest. They don't want to sell. I'm going to them and I'm saying, listen, why don't we do a wraparound? I'll give you 6%. You're going to make 2 to 3% more than the banks. I mean, they're making like bandits. They're making on banks money. So yeah, it's much better.
So then what you're saying, Cherif, is for those who are like starting out, they shouldn't be afraid of the current market. They should go ahead and give it a shot.
Yes, yes. As a matter of fact, the thing is, I always look at what's the economy doing so I can position myself. What is the president policy gonna be? And I can position myself. I'm not here to fight the system. I'm not here to fight anybody. I'm here to understand what is happening now. And when you understand what's going on, you can make a lot of money. I can give you a couple examples. A few years ago, when Clinton was in the office, he came out and he said, we're going to create a rule. We're going to call it Internal Revenue Code Section 121. Clinton came up with this and he said, you're going to live in the home 2 years in the past 5 years. It's going to be your home. If you're single, when you sell it, you get up to $250,000 in tax-free gains. If you're married, you get up to $500,000 in tax-free gains. Now, if anybody understood what that policy means, it was a bonanza for residential real estate. It was just unbelievable. Why? Because all of a sudden you can buy a home, get a good deal, live in it, improve it, a couple of years later sell it, make $250,000 if you're single, and you walk away tax-free $250,000. There's no other way to get tax-free money. So that created an economic boom. Bush came up and he said, we're going to make it easier for everybody to own a home. It was the highest level of home ownership in the country at the time Bush took over. It was like 68% almost home ownership in the country. And what he did, he said, I'm going to drop the interest rate after the September 11th attack. People who paid attention and said, oh my God, interest rate is going to drop. That means properties are going to go up. It's going to be more affordable to buy instead of rent. You see, so all these things, Obama coming up and saying, now you can publicly solicit, raise the capital, get loans, and go get all these commercial deals. There was another bonanza coming up. So I set up right away Reg D 506C. And then Trump coming up and saying, we're going to create opportunity zones. So the areas that have not gotten money and all this, you can roll your money into these areas. And for 10 years, all the gain you're going to make is going to be tax-free. I mean, these are policies. Every president has the good intention to do the best possible for the country, whether we like him, we dislike him. I'm not here to fight anybody. I'm here to understand what they are doing and ask and clarify, and then I move in for the kill. So that's how I do it.
So, all right. So there's a couple things. So earlier you talked, and matter of fact, we'll go back to the cyclical, because I want to talk about the cyclical piece. You talked about that earlier, and I think that's huge because everybody doesn't realize it's a cycle. Just like you said, it's up and sometimes it's down. You got to know that cycle. But as well, for those who are listening, they want to know, one thing they're going to need to know is, where do they go? Where do they need to be paying attention to learn these things? Because as these articles are coming out, some of these folks they just don't know. So where do you look at and say, all right, well, I'm going to read the New York Times, Wall Street Journal, whatever it might be. How are you paying attention to what happens in the market and how it's shifting?
I want to make it very simple for people. Let's say you don't like to read much. You don't like to read much. Okay. You have no time for the news. You're a busy person. You're a single mother with 2 kids. You're a father who's got, so many things, like, life beats on the fathers, and then you go home, you got things to do. You want to invest, you want to hustle. I'll tell you the simplest thing. In residential real estate, just focus on an area, focus on a specific area, focus on a specific type of properties. Let's say 4-bedroom, 2 bathrooms, or duplexes, or triplexes, or 4plexes. So we're all in residential now. By the way, up to 2 units, 3 units, 4 units, up to 4 units, it's a residential loan. So focus on an area, focus on a specific type, and understand the values. How do you understand the values? See what's being listed on the market and for how much. Figure out what the price is per square foot. Talk to a couple brokers. Go to a couple open houses. See what's selling and how much they sold for. Get the list of days on market, DOM. Days on market. How long it's set on the market. This property set on the market 45 days. This one set on the market 30 days. This one 17 days. Okay, why? Why this one sold 7? It's got a pool. The ones with the pool, same square footage, they sell faster. All of a sudden, you will know this area is selling at 600, 650,000 in that zip code, and this zip code, which is around 3 to 5 miles from my home. These are the homes, a 4-bedroom, 2-bath. All of a sudden, a 4-bedroom, 2-bath comes up on the market at 450. You're going to go from being scared to do a real estate deal to being scared not to do that deal. Because you're going to see that's 150, 200,000. What's wrong with that home? Right. You go in and the guy tells you, right, I'm just in a hurry to leave because we have this opportunity to move. This happened to me. This guy tells me, I have my grandkids. I lived for my kids. They left me. They went to Ventura County. It's in California. And he said, I can't wait to go see my grandkids. We're wasting time here. Life is short. And he said, we'll let you have the home at 450. The home was worth like 600. I remember he said to me, I know it's a good deal for you, but I want you to buy it as is. I said, sir, where do I sign? Can I do the inspection next week? He said, no, you said as is. I said, yes, I want to know what is. That's all I want. He said, fine. He was happy. He had bought it for like 150,000 so many years ago. He raised his kids in it. There was a lot of love in that home. Right. So I still have that home. I never sold it. It's a positive energy in that home. Wow. But the thing is, he was excited to leave. He had a reason. And I had focused on that area. It was in Santa Clara, California. Focused on a specific type, the 4-bedroom, 2.5 bathrooms. And this one in particular had a huge pool and a big yard, which is very hard to find in the Bay Area in California. In Santa Clara, it's Silicon Valley, 20 minutes from Facebook. And this is many years ago, by the way. I'm going back to the 90s, okay? But the concepts are the same. This is evergreen. And once you focus on an area and understand the values, all you want to know now is today's value. Because we said, let's talk residential real estate. The market is going to go like this, up for a few years. From 2012 to 2021, up, right? And then it went flat a little bit in 2022, 3 months, and now it's coming down. It doesn't matter. If it's here, I want to buy here. If it's here, I want to buy here. If it's here, I want to buy here. And then if I'm buying to sell, if you're flipping, buying, fixing, and selling, I buy here, I fix it nice, and I sell right here. Buy here, sell right here. If it goes flat, buy here, selling here. Goes down, buying here, selling it. So the key thing is to be able to understand what's the market at hand and how I'm going to buy slightly below market to get a good deal. And it doesn't have to be a desperate seller. It doesn't have to be anything. It just has to be a property that I can have some improvement to it to add value. I remember I used to buy 3-bedroom, 1-bathroom, and I added a master bedroom. When you add a master bedroom, you get a bedroom with a bathroom. So I'll take a 3-bedroom, 1-bathroom. I'll spend $80,000 expanding the property with an extra master bedroom, but it would sell at 150 to 200,000 more. But I knew what the 4-bedroom, 2 bathrooms would sell for, and what the 3-bedroom, 1-bathroom, and I'd get it below more. So I didn't care where the news are, and they're gonna tell me, oh, there was a there was a hurricane in west coast of Florida, or there is a guy who stabbed some people standing at the bus station. All this negative news. I mean, like, please, you watch that stuff and you just don't even want to eat anymore.
That's true. So does that same tactic translate to the multifamily side as well? When you look at it that way?
So the multifamily, if you focus on an area, understand the values, you're going to know per unit what they're going for, but more importantly, what they're renting for. And in commercial real estate, what the cap rate is, capitalization rate, meaning if the property is $1 million, I'm just rounding the numbers, and it's netting 60,000 net, that's a 6% cap rate. That means if you have capital of $1 million and you're gonna buy that property cash, you're gonna net 6%, you're gonna net 60,000. So if you see another one at $1 million, but it's netting 70,000, and they want to sell it at $1 million, you say, oh my gosh, that's a better cap. I can buy it at the $1 million, and I'm netting more than the other one selling at $1 million. They're netting 60, I'm netting 70. So you can turn around and even sell it at $1,010,000, $1,100,000, or $1,200,000. Or maybe you can see, oh my gosh, this one, it's renting, the 1-bedrooms are renting at $700, but everywhere else, the 1-bedrooms are renting at $850 and $900. Let me go see the site. See, now you're focused on an area you understand. The next thing you're going to understand, hey, what's going on? There is a new employer here, a new employer there. There was a company called Amgen that went into an area called Thousand Oaks in greater Los Angeles. Them coming in, if you had focused on an area, you could have just grabbed any multi-units, 30 unit, 12 units, 15, it didn't matter. There was nothing else available. The rent had to go time and a half. So you buy a property, let's say you're doing a fund. You raise the money, buy a couple properties at 5 million each, because now you're multiplying your power because you have raised capital. That property in less than a year will be worth 7.5 million. So you put 2 million, you walk away with 2.5 million on the 2 million profit on each, and you buy 2. How much money can you make in one lifetime? How do people become so rich? It's a concept of a multiplier. It's not the leverage as much as the multiplier. So what's the multiplier? If the market is 6% cap, so the property is selling at $1 million, but it's netting 6% capital. That means for every dollar you bring to the bottom line, the value of the property increases by 16%. Look at it. Look, I'll show you something. You take a calculator and you say 60,000, divided by 1 million, that's the 6% right there. So if you make the property, make an extra $6,000 only. So $6,000 more coming to the bottom line, divided by 0.06, because 6% cap. That property increased in value by $100,000. So that's a multiplier. Can you increase the income on that property by $6,000? Well, let's say you have 12 units. Can you increase them $400 each, minus some expenses, and you bring to the bottom line the 6,000 net? What if now you put some antennas on the rooftop and antennas for a phone, and they shoot a signal on the freeway? Next thing you know, they're paying you $2,000 a month for the antennas. That's an extra $24,000 a year. So now let's see, $24,000 a year divided by 0.06 for 6% cap, you just increase the value of the property by $400,000. Let's say you put some vending machines. Let's say you provide service to, say, dog grooming or pet sitting. You're only limited by your knowledge, your training, and ability to execute.
You know what? It's interesting. When I started in multifamily, and I've only done one deal to this point, but when I started, what always amazed me is how minute a change can be to have such a large impact overall in a commercial multifamily deal. You could add, like you said, maybe 1 or 2 parking spaces. Next thing you know, because parking spaces in that location are a premium, that just kicked up your rent price, because now you're able to, hey, you got more parking spaces in the other locations. It's always just, it's nuts. And with that said, tell me, Cherif, what is your favorite kind of investment to be invested in? And I'm sure it has to do with value add, but really, because you're doing a lot. You've done multifamily, you've got funds, I'm sure you've gotten some storage stuff, you've done hotels, you've done historic buildings, you've done it the gamut. What's been the biggest one? Like, you have to say, hey, this was the deal for me.
Okay, I love mixed use properties. Mixed use is I have upstairs retail and upstairs residential or office. I love these mixed use because you have the tenant downstairs that signs for 10 years, and you have the upstairs, you can do Airbnb, you can do long-term rentals, you can convert to offices, etc. But I tell you which one made me the most money. Believe it or not, it's single tenant retail. You know, the standalone building? So I find a standalone building. Like it could be Jack in the Box, or it could be a Starbucks or Burger King or whatever, but it's sitting vacant. So I love these. And I go to somebody, I say, well, how much do you want for this? It's sitting on the market. And let's say they tell me we want 700,000. So I tell the person, listen, it's sitting vacant. Let me make you an offer 600,000. And then I put it under contract. I have usually 45 to 60 days to do inspections. You know what I do? I don't even do inspections or due diligence. All I do is I start smiling and dialing, and I call the big national tenants. And there are thousands of them. I call all these quick service restaurants, you know, all these quick service, like a Star in the Box, a Jack in the Box, a Starbucks. I have, I've done jewelry stores even for these. I've done clothing stores. We've done Tommy Hilfiger, Burberry. We've done Sunglass Hut. And the beauty is, when I start smiling and dialing, all I need, and I tell them, hi, my name is Cherif Medawar. I got a property at 123 El Camino Real. I'm calling you, leaving you a message. I can send you a picture if you're interested. This property would rent for, let's say, 60,000 a year, whatever, that's 5,000 a month, and it's triple net. Triple net, that means the tenant will pay the property tax, the property insurance, and the property maintenance. And the beauty is, when one tenant, all I need is one tenant, let's say it's Subway, and Subway sends me an email and says, yes, we're very interested in your voicemail message, want to follow up with you, and would love to make the deal happen. What they will say is, let's say we're going to pay 60,000 a year. That 60,000 will come to me net. We'll sign a letter of intent, and the property immediately, I have it under contract at 600,000 or 700,000. It jumps to over $1 million in value. It immediately makes you 300 to 400,000 in profit, because the tenant that came in is a national tenant, and they sign a 10-year lease with escalations, triple net, meaning they pay the lease net of tax, insurance, and maintenance. Those are by far some of the most profitable deals that you can actually make happen.
Okay. All right. I apologize, Cherif. I don't know what, I lost connection for a couple seconds, but I made it back. So we're good. We're good. I'm certainly recorded everything. That's still, I'm gonna go back and double listen to what I missed out on. All right. So with all that said, you've gone over just about everything, and you've got more. And if it's okay with you, I'm gonna have look back on at some point in time. I know you're a busy man. I don't know what I got to do. I will send a pigeon to Rico. I will fly, maybe smoke signals, whatever we got to do to make it happen. I like to make it happen.
Yes, sir.
For anybody who's just getting started in this, and particularly let's gear this towards specific audience here. So in the Army, we have something called troop to task. And this is for when you're in charge, you give them one thing. Hey, I want you to do this. And this is going to get you started down that right path. As a brand new person investing, what's that one thing that you would tell them to do, Cherif, to get started down the path in real estate investing? Or even a fund, possibly?
Honestly, if they go on YouTube and put my name, Cherif Medawar, which is right here on the screen, Cherif Medawar, and watch, I have a lot of free videos that train people and tell people what they can do when they get started. I was lucky enough when I was younger, I met a billionaire who noticed how hard I was working in a hotel in Los Angeles. And he said to me, hey, listen, come and work for me. So I was in my early 20s, so it made a shortcut on my life. And then what I learned from him was unbelievable. I mean, the guy was a billionaire at a time when you can count billionaires on one hand. And his name is Edmond Bessari. I even wrote a book about my journey and how I invest now, and it's called Blue Ocean Opportunities in Commercial Real Estate. I sell it at $2 on
Kindle. Yeah.
No, yeah, on
I know.
Amazon.
I was trying to pull it up, trying to get it down. Absolutely.
I mean, I'm not trying to make money from it. And then I said, what's the best way to give back? Should I give money? Should I give? I said, the best thing is to give knowledge, because I was so thirsty for knowledge. I wanted somebody to show me the way, demonstrate to me. And so I created the YouTube channel. I have Ashley, she's my VP for many years, and she has helped me launch that stuff. So we give a lot of free information. And a lot of people give good feedback online. You could see them, they put some good stuff like, hey, this is good, tell me more about this and that. So I have somebody filming me and stuff, so it's not like I stand there and just film, but I think they will learn a lot about variable ways to make money. And I'm not talking about little money, about how to get started and how to scale very big, how to understand the strategy, and more importantly, the structure to put the strategy in it. And then the system they got to use, and how to automate it, how to scale it, and how to sustain it for generations after them. And I worked very hard to develop this. I mean, I've been investing for over 40 years, and people tell me, oh, you have so much energy. Yeah, money is energy. You get excited. If I give you right now $1 million, Oliver, you're going to be like, oh my God, wait a minute, I got to be looking at some properties, calling some people. It's just a whole new level of energy. And I want people
I'm on the first flight to Puerto Rico, Cherif. I'm on the first flight to Puerto Rico. I'm invested with you.
You're welcome to. I have a lot of properties here in Old San Juan, and I've been here many years, and I go back and forth here in California, and the office is in Florida, so you'll love it here.
I have zero doubt about that. I've got a friend who frequently goes out there. He has family out there as well. And he's like, hey, come on, you need to listen, just give me some time. Let me get some of these properties underneath me. I'm on the way. Say no more.
That's great.
So with that said, Cherif, we're going to hop into a more fun part of the interview.
Okay.
And in this part, I'm just going to ask you some questions.
Yes.
Just some questions that are geared towards you, and just fun questions. It could be real estate related, could not be real estate related. It's 100% up to your thought process and how you want to answer it.
Yes, sir.
5 questions. So we call it the hot seat. So let's get into the hot seat.
Okay.
All right. So what short phrase can someone say to make you instantly like them?
Okay, I'll tell you one that is very valuable for me. Is when somebody sits with me and says, what kind of exchange of values can we have? If I give you this, if I offer that and get this done for you, what can you do for me? You know what I mean? Right. Sorry. Because any relationship is based on an exchange of value. And if one gives and doesn't get any reciprocation from the other side, the relationship disintegrates. That's what happens between friends. That's what happens between partners. That's what happens between anybody who pays for something or is committed to doing something but doesn't get that back. And so somebody asking me, if I do this, what would you do for me? What can we exchange in value? Clarifying that from the get-go creates a long-lasting, powerful relationship. So that grabs me right away. And that's how I communicate with people with whom I do business. Okay, what's the next question?
I like it. All right. Say no more. Oh, I got you, Cherif. Here we go. Here's the next question. Who would you choose to have dinner with if you could choose anyone in the world?
The current Federal Reserve chairman, because whoever is in that seat controls the interest rate, the flow of money, and that person will, I hope, over dinner, especially if I'm paying for dinner, they would actually divulge and open up and tell us what's going on. Because whatever happens to the United States and in the United States affects the whole world. So I would love to have dinner with somebody like this because I'm a business guy and I want to pick their brain. I want to understand how the system works. And there is nothing better than those who control the money supply and the interest rates. So I would love to have dinner with them.
Fair enough. All right. Next question, Cherif. What poor decision have you made in the last 12 months?
What poor decisions?
What bad decision have you made in the last 12 months?
Bad decision. I'm very deliberate on the way I decide. I think judgment is very important. So knowledge that gets you to have good judgment is very important. Bad decision.
If you've been batting 1,000, Cherif, it's okay. You can say it. It's all right.
No, but I have to find something that I would like to do different. Bad decision. I'll tell you one bad decision. It's kind of personal, but I took a flight from San Juan to San Francisco to look at my properties that are in the fund. We do luxury homes in San Francisco. These are like $4 or $5 million each home. We add square footage to it. So I had 6 properties to do and I crammed my schedule so bad. I flew, and this is a long flight, to connect through Dallas, got there, took a shower, woke up too early because I was too excited, went to see all this, then I had to take a flight all the way back because I had a meeting that became early. That was such a bad decision. Honest to God, it took me 2 days to recover because the planes and the connections and I had to be fresh and it was very bad. I mean, my meeting, I was just sluggish and it's not the usual way I am. So I regretted that very much. So that was a bad decision. And the key thing is always take care of yourself to be in the present time, energetic, etc. And I had eaten bad food on the flights, beat myself up. So that was a bad decision. Thank God in investments, so far so good.
Hey, I like it. That's pretty funny. Okay, you've organized a protest of 5,000 people, Cherif. What's the protest for?
You know, the likelihood of me being part of any protest is highly unlikely. I cannot see myself protesting. I think there are so many good causes for so many good people. I support them all. If anybody's so convinced they have to protest to get their point across, I would stand back and I would say, okay, do what's important for you, and I would support them. But I would see what decisions are going to be made and how that's going to affect the business and the other things involving that, such as my happiness, my kids' safety, health, etc. So I would not be in any protest. I don't think you will ever find me in a protest. I'm a child of humanity anyway. Whatever the problem is, we'll make it happen.
All right, so say no more. Let's pivot that a little bit. If you had, well, I'm sure you have, but let's say you have a spare $5 million. What's your favorite charity to give that $5 million to, and why?
You know, I believe in the cause of what's called the global warming. Now, believe it or not, I did not believe in the global warming till a few days ago, and we're in November 2022. I did not believe in the global warming. Until I saw a video of this guy who actually created small satellites as big as a loaf of bread, 200 of them, and they launched them. He used to work for NASA, and you can Google this and find it. He used to work for NASA, and he and his team created these 200 satellites. They launched them into space a few months ago, and they took 4 million photos of Earth every single day for the last, I don't know how many months. And when I saw the video, which was 3 minutes, and it shows you from, outside, from the space Earth, and it shows you what's going on with the Sahara Desert, what's going on with certain water areas, what's going on with the jungle and all this, and how the global warming is impacting us at a very rapid pace, it blew my mind away. I want to do anything possible to help the greater good, everybody to live better, generations after that to not get squeezed in space and in health and in misery with what's going on right now that we have caused. So that would be the cause.
I love it. All right,
and if that's not the cause, I'll give you a second one, if I may. Would be anything about child abuse.
Oh, please.
That's something that's very near and dear to me. I cannot stand hearing stories about people abusing a kid or something. It bothers me a great deal, and I always want to dedicate time in my life to help that and go into areas where there is a need for that, like child trafficking or stuff like that. That is crazy to even imagine that some people would do that.
Yeah, I'm in 100% agreement with you. I see that constantly on the news, which, like you said, is sometimes a smorgasbord of all negativity possible they can find. But it makes no sense to me. That never made sense. I can't understand it. I don't think I ever will, especially now that I have kids. It's just doesn't make sense.
Yeah,
Why?
crazy.
Anyway, but I'm with you. I'm with you, Cherif. All right. So next question. Next and last question. What is something most people love? I'm sorry. What's something that you love that most people hate?
Something I love, quiet. I like to sit like in a restaurant with no background music. I like to sit at the airport with no noise. I like quiet. It's my best time to observe, to talk to people if I'm having dinner or something. And there is always this background music or people playing these live bands. I'm like, this is crazy. I can't even hear the person talking to me. So I like quiet.
Right.
People love noise.
I love it. That makes perfect sense.
Yes,
all right, Cherif. So there's more I definitely want to talk to you about, but for now we're going to call this one. But I want to make sure people get and people to reach you and talk with you and reach out to you and actually, however possible, what's the best outlets for them to do that with?
Actually, if they go to my name, cherifmedawar.com, they will see how to reach Ashley or Nancy or anybody in the office to talk to them. So, and if not, they can go to info@cmrei.com. CM is Cherif Medawar, REI is realestateinvesting.com. info@cmrei.com. They send an email and they will get a response right away. We're very responsive. My team has been with me since 2003. I've been teaching for 22 years, and I love to share. I'm openly sharing my business model. I have joint venture programs for the retail buildings. I show people how to set up their funds. We do a lot of things alongside what I'm doing because I don't do mentorship. I don't care what people want to offer me. I don't have the time for it. I tell them, look, come and learn. I do it, learn from me, and then launch on your own.
I love it. I love it. Ladies and gentlemen, Mr. Cherif Medawar, my man.
Thank you, sir.
That's awesome. Thank you, Cherif.